Before we dig into specific names, give us your overall outlook on which parts of the tech sector have the most opportunity right now.
Thanks for having me. I think we really want to stick with what's done well. There's going to be pressure on budgets. There's going to be curtailments in terms of where dollars are spent. So I think we want to look at the sectors where it's going to be top of the stack, where companies are going to spend money, and that's probably in areas such as enterprise software, artificial intelligence, cybersecurity, those areas that are really critical to the business and to efficiency. So I think that's an area where there's still opportunities, but also opportunities in other areas of the market where you have really stable companies and very strong ecosystems. So you really want to stick with what's worked, what's outperformed. I think that's going to be a theme as we get into a scenario where there's potential for margin pressure, there's potential for earnings misses. You really want to stick with what's strong and stable.
Yes, certainly a lot of potential for things going wrong with so much pressure on the consumer right now. Tell us this common theme. Tell us about this common theme you see for Netflix, Tesla, and Snap. Why is competition a rising concern for all three of those companies?
Yeah, competition's heating up, and it's going to show up certainly in a lot of areas where companies for a few years have enjoyed less competition, or the environment of a very strong economy and high liquidity has just lifted all boats. But right now, when we're getting a bit of a pullback in terms of liquidity, a slowdown in the economy, and that competition is really going to heat up. So that's going to be a consistent theme for Netflix, for Snap, for Tesla as well, for that matter. There's just a lot of companies that are coming into the same space and really coming in with a strong offering. And it's not clear that the growth that these companies have enjoyed in previous quarters or previous years for some of them is going to be sustainable in this area of much more intense competition.
Huh. Yeah, Young-Yu, it seems to me Netflix has been spending a lot on content to build a member base internationally, and the stock has been trading a lot on sub numbers for years now. And I just wonder, can that continue, that intense spending with the idea that subs are the most important thing, growth is the most important thing, while losing money, or at least in those markets?
Yeah, that's a tough calculation, because in a lot of those less developed markets, the cost of Netflix is nothing like the cost per in terms of the budget spend for a household that it is in the U.S. It's actually a much more significant cost. So spending that money and looking for subs in areas where the growth might actually be limited and the profitability might be limited, that's a challenging scenario. But still, for now, I think the markets are going to focus on subscribers. It was such a big issue, of course, and I think there's a big range of possible outcomes for the subscriber base for Netflix in terms of how much deterioration in subscribers they actually see and how far that goes into the future. So I think that's still going to be the near-term focus. But if we think of the long term, that is the big question of how much profitability they can get out of these markets, not just the subscriber base.